Welcome to another episode of Real Turkey. Atilla Yesilada is with our regular guest host, Ms. Guldem Atabay. Sudden developments in Turkish politics and economy, which spooked the currency market as we speak on today. Today is Monday, right? It's Monday.
It's
Anyone?
it's it's Tuesday.
Oh, it is Tuesday. It's already Tuesday. It's too late for me, that's for sure. As we speak on Tuesday night, just before Turkish markets close, dollar TL pair has traded up to 5.73. There are political reasons, but more importantly, a new decree or regulation by the Central Bank of Turkey, which have caused these. At least that's my opinion, but we're going to ask our expert, Ms. Guldem Atabay. Let's start with what I consider a major shock in Turkish politics. The Interior Ministry has removed three Kurdish or HDP party mayors from their jobs on account of aiding and abetting PKK while they're under investigation, which has led to widespread condemnation from EU and Council of Europe as well as human rights organization, and triggered some small-scale protests in Southeast and even in Istanbul. Why were they removed, and do you expect this to be a short-lived turbulence in Turkish politics, or is it the beginning of something bigger?
Well, before going to the reasons, I think it's not going to be a short-lived turbulence in Turkish politics. Yes, they have been sacked before, but that was before the March 31st local elections. And it was the AKP's way of dealing with its joining of forces with the nationalist MHP and ending the peace process with the Kurds. These removal of Kurdish-based or Kurdish nationalist or Kurdish pro-Kurdish HDP governors from big cities in the southeast of Turkey. But it's repeat after this March 31st local elections, when these people have won their places by more than 55 to a range of 55 to 63% of votes within their cities. Just 6 months after those elections, I think it's just the beginning of another long round of political turmoil in Turkey's southeast. The thing that's different from the previous appointments, I believe, is that this CHP, Turkey's main opposition party, and HDP had joined forces during the Istanbul's local elections. So any reaction from the CHP ranks, which they appear kind of muted for the moment, I think is going to, or could have, it has the potential to spread this protests beyond southeast of Turkey. So it's to be seen. But whether the HDP voter base is to remain silent within the coming few weeks is to be seen. But I think the protests will continue. And as you said, there was widespread reaction from the European Union, which was basically the European Commission condemned it as of today. So I think it is going to be an important political factor to follow in Turkey from yesterday and on.
Yesterday, I was talking to a member of the press who is, in contact with the business community, who told me that businesses don't like these kind of events, even though it's not directly economic, because it increases tensions and reduces people's propensity to consume. Do you agree with this point? Could this political development have economic ramifications?
Well, always I think it has, because consumer confidence has been so low in Turkey, given the recent turmoil that have been lasting in the past 12 months in Turkey, economic turmoil. It was just about on a recovery trend because of the effects were kind of fading, the currency shock effects. But right now we just had elections. The elections were already debated, with the Istanbul election being repeated. And now I think Turkish people are losing their confidence whether there'll be any other elections in Turkey right now, because such a removal just happened only months after, when these governors or when these mayors, HDP mayors, were elected with a strong voter support. So people losing their faith in the democratic system of Turkey, maybe that's an extreme case, but I think it will be affecting investor sentiment for both locals and foreigners as well. So surely it will have economic repercussions in the country.
Let's move to the external threat, the Syrian province of Idlib. There is a key town there on the southern edge, or controlling the main road to Idlib city called Khan Sheikhun, I believe, which is currently contested between Assad's army and Turkey-supported rebels of various factions. A Turkish convoy delivering presumably either supplies or military armaments to the region was struck by Assad's jets, and Turkey today issued a very strongly worded ultimatum to Damascus government to keep its hands away from Idlib. Russia seems to be siding with the Assad regime and warned Turkey not to help the terrorists, quote unquote. Do you see any prospect of Turkey directly being involved in the Idlib clashes, or Turkey and Russia breaking up over Idlib issue?
I don't think a breakup between Turkey and Russia relations is the main question here, because Turkey has sided with Russia in Syria and on many grounds as well, as evident from its S-400 missile system purchase, despite the U.S. condemnation for that step. But the Idlib case, I think that is going to be problematic. Turkey might be able to manage a maneuver in terms of moving its base far from Idlib, because obviously Russia, Putin is backing Bashar Assad's Syrian regime in the country, and Turkey in that region is maybe, as per the press, is having close ties with the al-Nusra in that region, which sees as its regional allies. And what we're saying is that since there are hardcore religious-based groups in that region, they are what the Syrian regime is calling the terrorists in the region. So I think Turkey will be scaled back by Russia. Any further clashes, any further attacks, I think that was a warning sign. I don't think that further attacks are in the cards right now, but Turkey will have to back up from its presence around that town. And also we should remember that was the town that was attacked by chemical weapons a couple of years ago, which was again condemned by the outgoing Obama administration in the US. But no political or economic repercussions followed that chemical attack in that region. So it is the main challenge, or the main contest is between Russia and Iran, I think, in the region, and Turkey will just have to back up. Any repeat of such attacks, I think it will escalate the tensions. But I think Turkey will keep playing the game along with Russia's demands in the future, in the near future.
Let's move on to the economics. I mean, obviously, you know better why the Turkish lira depreciated rapidly and suddenly, but other experts I talked to point to this new central bank regulation, which somehow punishes banks that don't issue loans and rewards those that lavishly issue loans. It changed required reserve ratios depending on the loan deposit ratio, I believe. Just give us a brief summary of what the regulation entails and what the purpose is.
Well, normally, reserve requirements are used to either extract or supply liquidity to the market at terms of different economic situations. This time, with some form of innovation, our central bank has introduced the reserve requirement cuts in such a way that banks who are having loan growth rates between 10 to 20% on year-on-year terms, I assume, are mostly benefiting from that. Their reserve requirement ratio is reduced, so there is more liquidity given to the market. But for those banks who are not posting that much of loans, they are going to be applying or they're going to be reserving the former levels of which ranges between 7 to 4% levels. So this means central bank is not really making a liquidity arrangement in the market. It's rather rewarding those bonds or banks or stimulating or motivating for the banks to lend more to the real economy and punishing those banks who are not really very enthusiastic lenders to the market. Well, we know that the Turkish economy is going through a very difficult phase. The private sector is heavily paying external debt and the domestic debt as well from restructured loans, which very high interest rates have been applied to in the past 12 to 18 months periods. And the Turkish locals are buried under a very high inflation rate, plus they are paying debt as well. And we know that banks having difficulties in raising cash from abroad, not below to a level of 100% in terms of getting syndication loans, but rather still from rather higher prices are being paid for the rollover of the syndication loans. So the banking side is not really eager to lend to the Turkish corporates who are having problems. And the problem loans have been piling up in the banking sector. So what we end up with that these state banks are heavy lenders, private banks are more shy in that sense. And what the central bank has just done is an interesting way of using reserve requirement ratios to support forced growth for the banking sector loans. I think that was the reason why it shied away investors to Turkish lira, because what we've seen was the rate cut didn't have such an effect. It was a very heavy 425 basis points rate cut that didn't move the Turkish lira at all, almost, given it had other reasons as well. But this time, I think the markets are seeing this as a major mistake carried out by the Turkish central bank. And of course, as the followers are knowing, the central bank governor was sacked like a month ago. Another one was replaced just for the sake of delivering further and faster rate cuts. And the new governor has changed his team, the top management team of the central bank. Now the central bank is just positioned to support what our president Erdogan is wanting. And what he wants, as we know, is fast and rapid growth in Turkey, which will hardly come through such measures, I believe.
Well, finally, give us a comment or guideline on the direction of the currency. We have the Fed event coming up, Jackson Hole, as well as central bank's own MPC on 12th of September. Do you expect rate cuts? Do you expect the global environment to support Turkish lira? What do you expect for Turkish lira at the end?
Well, I think the easiest answer is that I think our central bank will cut another.
Regardless of what, hey, I don't care.
Regardless of what happens in Jackson Hole or what happens around the globe, I think they have the willingness and they think they are able, just because of the global environment, the ability to further cut the rates, which will not come below 200, 250 basis points, I assume. Which will be followed further by the end of the year by further rate cuts. And as for the Jackson Hole, I think the environment will stay positive, relatively calmer for the emerging markets. Everyone is worried about the 2021 recession for the U.S. economy. U.S. President Trump is almost attacking the U.S. Central Bank Fed, as we know, to further cut the rates at least by 1 full percentage points before the presidential elections, before he answers the presidential election countdown. So what we know is that the Fed already has turned dovish. Yes, maybe they will not carry on with further rate cut schemes down the road, but still everyone is expecting for a rate cut from the Fed as well in September. So I think the positive environment for the Turkish lira or for the emerging market currencies will continue. But as our central banks exaggerates such steps, I think volatility of the Turkish lira will get higher by the end of the year when we're done with the limit and when the markets will perceive that the rate cut range is being stepped over by the central bank, added further further problematic measures, just as we saw yesterday with the reserve requirement ratio, I think volatility of the Turkish lira will increase down the road before the end of the year.
Thank you very much, Guldem Atabay. This was Atilla Yesilada, your friendly host for the Real Turkey Show. And we're closing up for today, folks. God knows when we'll be back. If you like it, please subscribe or share it with your friends or enemies. We really don't care as long as you share it. Bye-bye now.
Thank you.